So in this video, we're going to look at how to do a journal entry. And this journal entry handout is going to be your guide to help you do a journal entry or complete a journal entry. Again, you know the account types, you know the accounts that map to the account types. You can identify the normal balance by looking at the T accounts up here with the arrow pointing up. And you know if an account, if I ask you what's the normal balance of an account, you're going to quickly find that. And if I ask you if an account is decreasing or increasing, you can use that information to figure out the debits or credits. And that's the key. Figuring out whether account is increasing or decreasing, that is what lets you know whether you debit an account or credit an account. Okay? So let's look at the steps for doing a journal entry. Okay, so how do you record a journal entry? First, step one is a journal entry is based on a transaction. So what a journal entry is you go into the store and you buy something. You would just say, okay, I bought some candy from the store. Well, an accountant wouldn't do that. An accountant would take that transaction and enter it as a journal entry with a debit to a certain account and a credit to another account, right? So that's how it works. So how do you record a journal entry? So first thing is you've got to figure out what the company is giving or what is the company getting. A journal entry is always done from the perspective of the company. So when a company engages in a transaction, it's either giving away something or it's getting something, right? And there's an exchange. So it's giving something and getting something in return, or it's getting something and giving something in return. So what is it giving? What is the company giving? What is the company getting? If there's nothing being exchanged, then the company is using up something. So you've got to ask yourself, in this transaction, what is being exchanged and what is being given up or used up? And then what are the accounts involved? Once you figure out what's being exchanged in a transaction, the second step is what accounts are involved, right? And many times you don't know what the account is, and so you will go to this sheet and look and try to find the right account that reflects the transaction. Okay, step three is, are the accounts increasing or decreasing? And this is the key step because this is going to help you figure out whether you're debiting or crediting the account. So once you identify the accounts, are the accounts going up after this transaction or are the accounts going down after this transaction? And then that can help you figure it out. And then what are the account types? So once you know what the accounts are, whether it's increasing or decreasing, you map it to the account type. So here's the account. You figure out whether it's increasing or decreasing. You map it to the account type. And then you can figure out, okay, well, if this is an asset, if it's going up, it's going to be a debit. If it's going down, it's going to be a credit. And so step five is debit and credit the specific account based on the account type rule. So once you figure out whether the accounts are increasing or decreasing, you match it to the account type and you just follow the account type rule. And that's how you do a journal entry, which is a debit to a certain account and a credit to a certain account. So when we talk about journal entries, that's what we mean. A debit to a certain account and a credit to another account. Okay? So let's look at a simple journal entry, right? So ABC Company purchased supplies by paying $1,000 in cash. So we're doing the entry from the perspective of the company, right? So what did the company give and what did the company get? So the company received supplies and the company gave cash. So that's being exchanged. There's a giving of cash and there's a getting of supplies. So that's what's being exchanged. So now we go to step two. So what are the accounts involved? Now, if you don't know, you can look through this and figure it out. But in this case, the transaction, well, we gave supplies. There is an account down here called supplies. Right, here it is. And then there's an account up here called cash. So the accounts involved are going to be supplies and are going to be cash. And so now here is the key. What's happening to the accounts? Are the accounts increasing or decreasing? So what's happening to the cash? Well, we are paying cash, right? So cash is decreasing because ABC is paying cash. And supplies is increasing because ABC is receiving supplies. So your supplies are increasing, your cash is decreasing, okay? Cash decreasing, supplies increasing. And so now you go to step four, which is, okay, what are the account types? So I look for cash. Cash is an asset. I look for supplies. Supplies is an asset. What's happening to the cash account again? Well, we said the cash account is decreasing. And what's happening to the supplies account? The supplies account is increasing. Both cash and supplies are assets. So now we can apply the rule and figure out what we debit and credit. So we said supplies is increasing. Supplies is an asset. What do we do to an asset when it increases? We debit the asset. So we're going to debit supplies, right? Because supplies is increasing. What is decreasing? Cash is decreasing. So what are we going to do to cash? We're going to credit cash. So in step 5, right, what do we have? We have a debit. When an asset increases, you debit the account. When an asset decreases, you credit the account. In this case, supplies is debited and cash is credited. So we would have a debit to supplies and a credit to cash, and I believe it was $1,000. And that's how you do a journal entry, right? At the beginning, it's going to be a little bit slow because you're going to try to figure out all of these things. But after you do a couple journal entries, it will make sense. And in the next video, we're just going to go do examples of a ton of journal entries, right? So that's pretty much how you do a journal entry. A few rules to keep in mind. A journal entry must involve a debit, and at a minimum, a debit to one account and a credit to another account, right? So at a minimum, there must be one debit and there must be one credit. That's the journal entry rule. So you've got to have a debit and a credit. The second thing is you can have more than one debit and credit. So you can debit more than one account and credit more than one account, but the total of your debits must always equal the total of your credits. So the journal entry rule is at a minimum, you've got to have one account that's debited and one account that's credited. That's one. Number 2 is if you have more than one account, that's fine. The total of your debits must always equal the total of your credits. Okay? So that's a quick example of how to do a journal entry.